Good morning, everybody. Welcome to VerifiedInvesting.com. My name is Gareth Soloway, and as always, I'm here to guide you with your daily game plan in the markets. All right, so what do we have going on? Well, yesterday was a nasty day. And why was it a nasty day? Because anytime you have a big gap up and markets reverse and go negative, that's never a good sign. Now, I think part of that was nervousness over the Nikkei again last night. The Nikkei was down about 0.75%. That's okay, right? What's not okay is down 5 or 10 or 12%. So what you saw last night is the futures going lower early in the evening. Then once the Nikkei kind of came out and was stable up or down 1%, the markets essentially stabilized. And this morning we were basically flat. And then we got jobless claims. All right. So jobless claims coming out here, guys. And if we flip over to the charts, we can see that jobless claims, which are filing for unemployment, right? People filing for unemployment, they actually came in lower than expected, which is a positive, right? Less people filing for unemployment, 233,000 versus 241,000 expected. And look at the reaction in the markets here. The S&P 500, the spiders had a nice little pop here initially on that data sense. So nice little move to the upside. And basically what we're seeing now is that very clearly good news is good news and bad news is bad news, right? So again, it used to be different. It used to be the markets praying for bad news because it would mean the Fed would cut earlier and everyone was banking on no landing anyways. So again, you wanted to have that bad news. Now the markets are skittish. They see a potential for a recession increasing more and more, and they want that good news. So that's what we got today. Notice again, you are pre-market creating what we would refer to in the technical analysis industry as the potential for a bullish consolidation pattern. Granted, it is pre-market, so we have to take that into account. But again, that is bullish consolidation, the beginnings of it, which could imply a little bit more upside coming when the markets open in less than 30 minutes. All right, so let's go back to the daily chart and just kind of take a look here and see what the charts are showing us. And if we take a look here right off the bat, and bear with me, let me get rid of that, we can see that we did have this bounce. Now, the bounce came at a level on the charts that was mediocre, right? So it was this little pivot high right here, which was okay, but it was certainly not an amazing technical level. So you do expect a bounce, but the big question we have to think about is what type of pattern do we form? So as a technician, as soon as we make a low and get a bounce, right away my mind goes to what are we doing? Are we making inside bar consolidation? Are we going to do a sharp bounce and retest the all-time highs? Are we going to go back to the scene of the crime? And basically, that's what we're still waiting to find out. And when we draw our trend lines in or our lines, we have to decide, all right, so are we going to go like this, which is a clear bearish pattern, right? You have your sharp move down like this. You get your sideways consolidation. The result would be a down move, okay? Or are we going to get a different type of move, which would be a retrace to gap fill and the scene of the crime right here, which would also be bearish. And then we ultimately go even lower like that. So there are different scenarios we have to watch for in the charts, but we don't at this point as a technician have enough information. All we have is a big down move, a 1-day bounce, a pullback after a gap up day. We don't have enough data just yet to know. And by the way, we can guess at it, right? But guessing implies 50-50 odds or thereabouts. What I'm looking for and what technicians look for is basically 70-30, 80-20 odds, right? Really high percentage trading opportunities. In trading and investing, 80% in my opinion is probably about as high as you can get. There's always that risk of black swan events, of unforeseen situations, of earnings warnings, all that kind of stuff that can come out and make things tricky. All right. So let's go on to a couple other charts. I did want to touch on the VIX today. I have my level in the sand of where I'm looking for the VIX to come down to, where I will start to nibble on it again. So this is the VIX chart right here. We saw that mega spike to about $65. We then saw the big pullback. Yesterday we were lower. We then rebounded. Today we are now coming back in. There's a gap right here. And notice how this trend line can be extended out. So what we see here is if we extend it out, we can very clearly see it actually hovers right here at these previous levels. This level on the VIX is around 1850 to 1875. And so for me as a trader and an investor, and I was long VXX going into this volatility, and VXX goes up when the VIX goes up. It's a fear ETF. But basically, I'm looking at the VXX, and if we flip over to the VXX here, we can take a look. Bear with me as I bring that up. There we go. So we see the VXX had that monster pop. It basically went from 45 to 90. We're now seeing it coming back in. And for me, that should coincide with somewhere in this 50-51 range. So at 50 to 51, I start nibbling on the VIX again or the VXX for a long trading opportunity. All right. On to a couple other charts here that are making movements this morning. Robinhood is having a decent little move. Remember, yesterday in trading the close, we watched earnings come out. Initially, the stock popped, then it went negative, then it stabilized. It then started to trend up. And here, pre market, look at this move here on the good results. And I think this is fascinating, guys, because this pop pre market, where the stock went from 1765 to 1865, that's a dollar jump in an $18 stock. That's a huge, huge move. And many people are like, well, what happened right at that time? Well, guess what? That was right at 8:30 when the jobless claims numbers came out. And now you might say, well, why is that influential? Why do people filing for unemployment have an impact on Robinhood? And the answer is pretty simple in that if the economy stays stronger for longer or stays stronger in general, people will have more money to invest in stocks via Robinhood or crypto via Robinhood, and it is better for the company. So this company is very clearly a company that caters to more the younger crowd, the crowd that is needing to work for their income, which then they take some of that income and they put it into Robinhood. And therefore, this really has a much bigger impact based on good economic news, as we can see right here. So I thought that was really interesting to kind of take that into account. All right. Eli Lilly today, big pop on earnings. It was interesting because Novo Nordisk yesterday had weak Wegovy sales, which is the weight loss drug. That stock was down, and in response, Eli Lilly was down. And then Eli Lilly reported earnings this morning that were monstrously good. Big, big, big beat across the board, revenue and earnings. The stock is soaring here, but I guess I have one question. If we go to our daily chart, we can clearly see that it was a channel. And I'm looking to see where we close today. Because if we close at or below 840 today on Eli Lilly, then all this is a retrace to the scene of the crime right here, which would be resistance. If we close back inside of this, well, then you could trade back up to the midpoint, maybe the dotted line right up here on Eli Lilly. But again, any close at or below 840 today on Eli Lilly would actually be a bearish close on the stock and likely insinuate more downside action in the stock over the coming weeks and months. And let's be clear, guys, whatever Eli Lilly does in the near term, downside is looming on the longer term, just like what we're seeing happen to NVIDIA, SMCI, all of these other names. Eli Lilly's going to have a ton of competition coming in, and margins are going to get crushed for their weight loss drug. They're not going to be able to charge, $500 to $1,000 a month for a weight loss drug when 10 companies sell weight loss drugs. So we just want to keep that in mind. All right. Next up, I wanted to touch on Datadog here. Datadog is up on earnings this morning. It's not a big move, so there's no technical levels here to trade. But again, nonetheless, it closed yesterday around 108. It's near 115 today. So a little bit of a move up on Datadog. If we look at the stock, it was kind of in a free fall going into these numbers. So it's really snapping back on a technical standpoint. There is going to be a fair amount of resistance right in this vicinity around 118, but I'm not keen on shorting it. It's just not a big enough move. Maybe if it got all the way up to this gap fill at 130.85, there might be an opportunity there. AppLovin yesterday initially popped on earnings, fell sharply, then rebounded. Almost no change in price action here. All right. I'm going to give you guys one of my favorite sleeper plays here. So again, this is a high risk play, but nonetheless a play to watch today. Keep an eye on FSLY. It's getting hammered on earnings this morning. But one of the things I read into this, they beat on revenue and they beat on earnings, and the stock is at essentially all-time lows. So it's just an interesting little opportunity here. Kind of very high risk, but again, maybe a sleeper play. They do about $500 million in revenue a year, and the market cap's only about 900 million as well. So it's not even trading at 2x revenue. Now, granted, they aren't a profitable company, but nonetheless, I thought that the earnings results when I went over the conference call were actually not that bad to dictate a 15 to 20% loss on the stock. Anyways, just wanted to keep an eye on. It probably is down 15, 20% today, but I wonder if it's going to make a bottom in the next week or so and maybe start to turn up there. All right, other stocks in motion today, guys. Let's see here what else. Solar Edge is taking a beating, SEDG, and SEDG is down pretty sharply pre-market here, trading down around $19 after closing yesterday at looks like it closed around 23.50. So 23.50 close. In terms of technical levels, this is another stock that is basically at 52-week multi-year lows. We actually have to go all the way back to 2017 to find these levels. Now, in 2017, there were some very interesting levels around 18.50 or so to $18. So once you get in that range, there might be an interesting level. I don't have a specific date or point for a day trade on this. It's more maybe taking a nibble on a swing trade, but again, very, very high risk in this lower level. All right, so those were some of the bigger movers here. I did want to touch on SMCI because SMCI got wrecked yesterday, absolutely crushed. If we flip over to the daily chart, we can see it closed right around that key level that we had talked about. Pre-market, last I checked, it was lower, although it has bounced off of its lows. We're still trading around 488 or so, though. Now, where would a level be? Where's the next level? Because honestly, I'm not interested in this level anymore, right? So that level is done. But what I do see is around 457. There's a little pivot. You guys see this right in here? It might be hard to see. I can zoom in a little bit more. I just want to keep the current levels. But see right here, right on that area right there, you kind of went sideways, right in here, sideways. That to me is an interesting level. It's just below 460, around 457. There might be an opportunity there. However, on a swing trade basis, I'm not interested until it gets much, much lower. I was looking at this a little bit more. There is a level around 440 for a potential swing trade, but really my ultimate resting point is somewhere in the 350 to 325 level. Okay. All right, just a couple key notes here, guys, as we continue through. Number one, I just wanted to touch base quickly on the algorithm that I have with Lux Algo, folks. And again, I just want to go to our website here and just show you guys this. If we go to the top of verifiedinvesting.com under AI and algo trading, you have Gareth Soloway Lux Algo reversal signal indicator. That is the algorithm that is on Lux Algo. It appears right on your trading view charts. It tells you topping and bottoming signals. Very, very informative. So if you want it, it's right there for you. I think it's only $29.95 a month. So it's pretty low in terms of the price point entry, but definitely just wanted to pass that along to you guys as well. All right, on that note, we're just going to take a quick 30-second break to take a look at Lux Algo. Then I'll be right back with Bitcoin, gold, natural gas. We'll even cover palladium. I saw a request for palladium out there. We'll even cover that one just 1 minute away or 30 seconds away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, right into the charts here on Bitcoin. Bitcoin having a beautiful surge here. My upside resistance level remains around 60,000. 60,000 to me looks like that's where we are headed. So again, let's focus on that level. If price should get there based on a retrace method, a standard retrace, you have this type of fall. By the way, one other method you can use as well is you can do a fib here, right? So if you do your fib to the lows, we can see that where is right in the middle, that would be a 50% retrace just below 60,000. So right in between both of these lines. And so again, I always like to find levels that have coordination between fibs and retraces and trend lines and all these other things. Because again, when you get multiple factors to align at a general price, the odds of it being a bigger resistance in this case is absolutely intact. All right, so again, look for further upside on Bitcoin, but once it gets to about 60,000, that is going to be a level where it struggles. Let's look at Ethereum, which has been lagging Bitcoin. It is getting a small bounce, but notice how Bitcoin is retracing. Like if we were to map Bitcoin over this chart, Bitcoin would be in this upper range here. Let me go here. Bitcoin would really be all the way up here at this point, right? Bitcoin's just a little ways away from that technical resistance, while Ethereum is still struggling quite a bit. Now, the key for Ethereum, and this is really important, guys, it's got to have a daily close. Notice how the last 3 days, today, yesterday, and the day before, it's basically at 25.50. That has been your stopping point, right at the highs of the wicks right here. So what that does is it gives us as technical traders a very firm level to look for of what needs to happen on Ethereum to get the leg up where it takes us back to about $3,000. So you need a daily close above 25.50. If we get that, we should have a move up to the 3,000 marker on Ethereum, this resistance trend line here. And just to zoom out and show you where that line's coming from, it's a classic retrace to the scene of the crime. The pivot lows right here. Then you have the hit right here. We broke through it, hit support, and then are snapping back. And in theory, based on probability, we really should go back to about 3,000 or give or take right around there, maybe 2,900, but right in that vicinity on Ethereum. Quickly looking at Solana, we can take a look at this here, guys. Solana pushing up a little bit above my first resistance point. All right, so that's a positive, but let's see where it closes today. It needs to maintain and hold above this line. If it's able to, your next resistance point on Solana, see this little flat bottom right here? That tells me there's going to be resistance right there. Put a trend line in, that would be around 171.45 as resistance on Solana. All right, flipping over to gold. Gold getting a little bit of a bounce today. One thing I wanted to show you guys is how channels are amazing, and we can clearly see a channel pivot high, pivot high, pivot high right here, okay? But also pivot low, pivot low. So we have our channel, but then look at the midpoint here, guys. The midpoint is really, really cool how it essentially puts in a midpoint resistance, right? And what I mean by that is, you know, when we're looking at minor, and these are only minor, midpoints are minor of channels, but nonetheless, you can see how we were just briefly above it, but now we're coming in below it. And you might say, well, what does the midpoint have to do with anything? Well, if we zoom out on this channel, look at how many points on the midpoint were key, right? Right here, right here, right here. That was a midpoint. These are all midpoints. Even right here, you could make a case where we kind of hit it and then pulled back before breaking above it. And even right here, right? So look at all these midpoints, even right here potentially, and then right here. So it's not to say that the midpoint is amazing, but I am watching it today to see, do we close above the midpoint, maybe for a move back to the upper range on gold, or does it stall out here at the midpoint and start to pull back down? Because I guess what I'm thinking is, you know, is there some sort of scenario where you get this, right? So we were below, just like we were in the last few days, we were below on gold here. We pushed up and then we had a big flush to the low end. And then we kind of came up and finally went up. Here we were below, pushed up into it. Do we get that big dump or can it get above and push back up? Let's take a look at silver here. Silver, small bounce on silver. I'm still continuing to angle for a downside move to about 25.40 on silver. Again, the industrial angle of silver makes it a little bit more vulnerable to the period where economic news is going to start to get weaker. So just something to keep an eye on there in terms of that data. All right. So we'll watch that very closely and see where we go here on silver. I did promise you guys palladium. Palladium honestly is not doing a whole lot. It's up today a little bit. But one of the things I wanted to show you on palladium is that it's basically stuck between multiple wedge patterns. All right. So number one, look at the constant downward move. All right. So what we can do is once we see the bigger time frame like that and we see, wow, it's just been continually kind of grinding lower. But the question is, when does it break out or if it breaks out? And what we can do is we can very clearly see that we have a level around this 1040 to 1025 to 20 level that is resistance. If price can get above there, you then potentially start making major pivot highs at higher highs versus lower highs. And that would be something that would then say, okay, you might be getting ready for a bull move in palladium. All right, platinum is much the same in that it's been consolidating. I'll touch on that one real quickly. I know a lot of you guys like your charts on platinum as well. And platinum, if we zoom out, it's been stuck in the same sort of thing, a bigger wedge pattern right here on the charts. And again, my only question here is it's not as low on the chart as palladium. So does it break to the downside and how vulnerable is it? I don't think it goes back to the 2020 lows, which were COVID lows. But could it go down to this area here where there's a lot of support at 833, 834? Yeah, it could. Absolutely. So I'm keeping an eye on that chart as well. All right, a couple other charts to go over. We want to take a look at oil here. Oil, again, has regained the wedge pattern after kind of what we would call a bear trap. It trapped people thinking it was breaking down, then kind of flipped the lid. But I want to encourage you to kind of think on a macro basis which is that any sort of kind of whip the shorts out type move up, even additional upside, the macro still heavily favors the downside. I mean, you have little short-term risks like more things occurring in the Middle East and escalation there and so forth. But we clearly know from all the previous escalations that it doesn't have a long-lasting impact, that the macro data out of China as well as the US are the most important for oil overall. All right, lastly, natural gas. I did take profits on Boyle with smart money yesterday, so great job there. That was a great gain over, I think it was 11.77%, something like that. So far, we're pulling back a little bit, so nice little move back down here. If we pull back into this level, this is major technical retrace to the scene of the crime zone. So watch this area here. And then the only thing as a bull that you do not want to happen. So you always want to, and this is important, guys, remember that it's great to kind of be like, oh, this is a great trade. It's going to go in our direction. It's going to make lots of money, all that stuff. But you're doing yourself a disservice if you don't look at the opposite side. You also have to look and say, well, what happens if it goes against me? What do I do? Where do I know that the breakdown has occurred? Because when we only look at the bull case in our trading positions, we end up getting caught essentially with our pants down, right? I mean, it's just a bad scenario. And so here in this scenario, what we clearly don't want to see is a daily close below the 786. If that happens, game off. It's probably going to 175 or lower. But right now, the bulls are in control, even on a pullback to this range right here. That would be a bullish scenario. All right. All righty, guys. I'm going to get to the trading floor, the Apex Live Day Trading Room. Thank you, as always, for tuning in. You guys rock. I love the comments. You guys seriously make my day every day when I see the kind words you guys spread. And that's why I come with my A game every day, even with COVID. And I'm sitting here with COVID right now. And I've been trying not to cough because of it. But nonetheless, I'll bring my A game every day to you guys, just like Verified Investing does here for the people. That's what that website is about, guys, for the retail investors. You guys have a good one. All right. I'll talk to you soon. Take care.